Morning all. It is Tuesday the 20th, just come off of a holiday. That usually kind of impacts trading a little bit on the negative side. You don't see as much movement. I would say it's negative. It's just, kind of low on the movement piece of things. So we're seeing just very, very minimal movement in the mortgage-backed securities today, but let's get in and take a look at it. Hopefully your guys' holiday was good. Mine was good. I'm out in Missouri, as you can tell. I actually brought somebody with me that's going to help me really, really dig in to understand some of the markets a little bit better. He's a professional trader. All he does is stare at charts and see what's going on in price action and things that's going to drive his trades on a minute-by-minute basis and what he's going to get in and get out of. That's what he does. So I wanted to understand 100% of what he does and how I might be able to apply it to this. So let's look at what we got just for the news this week. Today is a pretty light news day as far as what we're looking at today. Leading indicators, very, very low impact. We got mortgage applications coming in tomorrow. Again, low impact. Inventories for oil. That's a big one. And the Fed minutes. Fed minutes tend to move things all over the place. So what we have right now is people just kind of waiting, kind of poised in a really, really safe position, I would say, in the markets before they start making moves. Then on the 22nd, a couple of days from now, jobless claims. That usually has a pretty heavy hit to us. So we got that, home sales. So that's what our week is looking like, and it's a short week. So a short week is usually also a little bit tougher for us to make some calls with respect to the mortgage-backed securities. Now let's look at our mortgage bonds. So as we've been showing in the past, we've got that. I'm going to move this a little bit here. We've got that line that we talked about. That's my ceiling. That's, I think, is our ultimate ceiling, the ultimate place we're going to see pricing hit and not get above. We're going to be playing in these realms, in my opinion. This is my opinion. As you can see right here, bounced off the 200-day moving average. We're sitting right here in kind of a safe spot, trading between a ceiling and resistance. It used to be support. Now we got support and we got resistance. It's going to probably trade here, waiting to see for some definitive news and with respect to what's coming in, the crude inventories, and then, of course, initial and continuing claims. So initial jobless claims, people that just started claiming unemployment, and continuing claims, people continue to claim unemployment. They have not found a job yet. So those are big deals. So what I wanted to show you, though, is this particular chart. And should be able to see that, I'm hoping. So this chart is what was drawn by my trader buddy. He gets in and he's like, if I'm just looking at price action, how the market moves on a minute-by-minute basis and how it's actually acting based upon the history of the chart when he knows other people's money is waiting to jump in, this is what his claim is. He thinks we're going down to this level, 97.77, before we actually get a reversal and go back up. If it breaks through that, we're going to 97.20, breaks through that. But ultimately, he believes we might see this in the distant future. So here's our targets of strength he's giving. Final target says it's going to go down in here before it comes back. If you're a person right now floating the market, floating your interest rates because somebody said rates are going to get better this year. There was actually an article that came out that says we should see improved interest rates in February. What have we seen this so far in February? Let me get back to my charts here. What have we seen in February? I'm going to switch back to my other chart, all of February. So this was January 30th right here. All of February has been negative. All of February, every damn bit of it has been negative. There has been articles written saying we're going to see interest rates get better in February. They were wrong. They said interest rates were going to get better in the first quarter of 2024, back in 2023. They were wrong. So far wrong. Now, here's the other thing. If they get better from where? Go back to my buddy's chart here. See here. Where is that right here? Go back to his chart. They may get better from down here. That means we're going to be blocking at some of these other spots that we have as far as resistance we've been getting into. Better from where is always the question. So when people start telling you, well, they're supposed to get better in 2023 or second quarter, we can get down here to his target 2, and then our get better is in target to bounce off a target 1. That's not better compared to where we are today. Quit waiting for somebody else's synopsis. All they're doing is reading Yahoo News, or they're reading somebody's article from last year thinking this is what's supposed to happen. Well, everybody said also the Fed was going to drop the rates in the first quarter, and then they didn't. Right? They're also saying the Fed's was looking at what's going to happen with inflation. Inflation was on track and things were getting better. Look at what happened last week. Hotter readings in inflation. So if you're sitting there because somebody told you it's going to get better, because he happened to be regurgitating some bullshit that he read somewhere else, and there's other gurus I've showed you before, they had their charts, and their charts don't show my levels in there at all, and I don't understand why they don't. But I think what they're doing is they're just looking at news, and reaction. That's it. News and reaction, news and reaction, news and reaction. And they're reading all the stuff that what news could possibly be later. I think it's harmful. It's real harmful. If you're waiting for that, all you're doing is you're potentially setting yourself, and I'm saying potentially because I don't know, but everything I've looked at so far is telling me where it's going, and I don't think we're going to see it get better. So I appreciate you guys sincerely watching, paying attention, but know that those levels are high risk for anybody that's floating. I wouldn't float anymore. If you got anything in the hopper that you need to be locking and being protecting yourself, if you're taking any losses where you're hoping you were going to be as far as the rates, take it. Take it now because I think the losses will get uglier. They have high potential for getting uglier. It doesn't mean they can't flip around. We could say initial claims all of a sudden go the other direction. Everything's awesome, right? I can't say that's exactly how it's going to go. I don't know how they're cooking the books. We know there's a lot of cooking going on, but I really, really, really strongly believe that risks favor loss if you're holding out. So appreciate y'all. If you need anything, I'll be talking to you guys on Tuesday. You can always just text me. You know my number, 602-291-3357. We'll get in and help you out whatever way we can. Email me, reach out to Bree, schedule a time to talk to one of my key team members. Our goal is to make sure you're successful in this. I'm not trying to get you to jump and do something dumb. I'm trying to protect you. And right now, I think you're at risk if you're listening to people who are not taking the time to look at these charts and sit here with the trading expert and pick his brain for the next week. So I'll talk to you soon.